Just days before Christmas, state lawmakers are trying to put out fires, this time cracking down on insurance companies who some say are bailing on homeowners in wildfire-prone areas.
Putting at risk the California dream. So we are doing something about that.
While lawmakers are pushing a new wildfire bill that would prevent insurance companies from canceling fire policies. But the insurance industry says those regulations could end up putting them out of business. Good evening and thank you for joining us. I'm Sharon Roget.
And I'm Curtis Mings. So could the wildfire bill end up hurting you, as these insurance companies suggest? CBS 13's Lamore Abrams is here now getting answers. Lamore.
Curtis and Sharon, insurance companies say this bill makes no sense. They say forcing them to insure certain people would only drive them out of the state. But one homeowner we talked to says insurers are already abandoning Californians.
And it's a scary thing each summer when it's, that time of year that you have that idea in mind. You see the wind come up in the afternoon and it's a hot day. It's scary.
Their house in the foothills of Placer County is located in a high fire zone. But Sarah and Tom Fugate say their property carries a low fire risk.
In addition to keeping the local premises free, we also have a house that's 95% stone.
They say that design and defensible space has kept their house from burning down, but it hasn't stopped their insurance provider from canceling their policy after 15 years.
This is going to be a problem that's going to continue to persist.
Senator Ricardo Lara says he's heard from hundreds of homeowners like the Fugates, their insurance companies bailing on them. Now he's proposing legislation that bans those insurers from denying coverage in disaster areas.
What we see or could see is insurance companies no longer writing in the state.
Cara Cross represents insurance companies. She says they won't stay in California if it doesn't pay off for them.
If they're not able to be responsible to all consumers and be solvent, then you're not going to have as much insurance in the state.
Essentially, that's what's happening now. What happens is people are already being relegated to secondary insurance products which don't have the same protections that we have here in California.
By virtue of my zip code.
That's what happened to the Fugates. They've since found a new homeowner insurance company, but there's a catch.
Twice the cost.
Their premium is 45% higher than what they previously paid. But insurers say they have to charge premiums high enough to cover losses. Now, if this bill passes, the state insurance regulator would have to approve any new rates, and that poses a whole new host of problems. According to Senator Lara, he says they have to come to the table with the insurance companies to talk about possibly offering discounts for homeowners if they're following all the rules.
Well, the insurance companies are looking at risk. They don't want to be on the hook. They don't want to be stuck paying for a whole bunch of claims in a fire-prone area. They've done this for decades when it comes to fires, when it comes to hurricanes, and people need to have insurance because many of their mortgage companies require them to have insurance.
And Curtis, sources who work in the insurance industry tell me that for a long time, insurance companies have wanted to bail on California because we have so many disasters here. This is such a high-risk area. So now they say that lawmakers are giving them incentive to do so. And that's why this bill is going to be so controversial when the legislature resumes in January.
All right.
We'll have to see what happens. Lamore Abrams, thanks so much.
Well, now to the latest on the Thomas fire.